Hello and welcome to another episode of FinTech Focus TV with me, Toby. Today I'm absolutely delighted to be joined in the studio by someone I've wanted to have on the show for a long time. Known him for a long while. Matt Dangerfield, very pleased to have you.
That's me.
How are you?
Very well, thank you, yes. So I suppose I'm Matt Dangerfield. I've been running financial technology advisors for 10 years now.
Yeah.
Over 45 engagements across multiple different sectors from AR, VR, housing, front office, crypto, back office, custodial work, and various other things in between.
It sounds like you've been keeping busy.
Yeah, it's been
That's what it is, 45 different clients.
45 different clients in 10 years with my business partner, David Grocott.
Yeah.
We've been heavily engaged in lots of different projects, long ones, short ones, week ones, couple of day ones, and some that have lasted up to 16 months.
And before that, a sort of track record in... we met at Fixnetics many years ago.
Yeah. So I started in the city in '95, NatWest Markets, then moved around to various different banks. I've been at Goldie's as contractor, Royal Blue, multiple different banks, Cazenove, Bear Stearns, UBS, Deutsche Bank, and other places, Daiwa and things along those lines. So it's been a bit of a checkered one. Then I landed after Credit Suisse AES at Fixnetics, and then became the CTO of Fixnetics, where I invented the world's first commercially available field programmable gate array for execution after the 2008 crash, which then was hedge fund in a box, and sort of led to the rise and emergence of that whole tech and trying to bring the FPGA to the market.
Yeah.
And at the time, everyone was going on about GPUs, but we brought FPGA to it, and we got a number of big wins, especially in Asia, then over in Europe and North America. And we are where we are now. It's sort of a household name, and off it goes.
Hell of a journey.
Yeah, it's been fun. I joined another company as the Fractional CTO, where I invented a blockchain for them. And they were taking on Triana and ICAP on the post-trade FX, and was doing a consolidation of settlement messages, which worked really well and started to displace the incumbents on the marketplace. Sort of then moved on from there, helped set up Coiny, which was a digital custodian, and we had to architect a number of different routes to be able to do distribution of physical assets, and then virtual credit release to different exchanges or crypto venues, which involved tri-party agreements to get people to be able to move their cash and assets in a liquid way, in more traditional, which worked very well.
And it was getting the band back together for that, wasn't it?
It was, yeah. So Al Morbin, the founder of, one of the founders of Fixnetics, brought me into Coiny, and sort of went on from there. Unfortunately, that wasn't a success story. It folded for a number of reasons. But
1 out of 2 is not bad, is it?
Yeah. It's, I'm sure he's still quite happy.
The Fixnetics story was a good one, nevertheless.
Yeah.
And this is part of that story, and I'm just listening to it nostalgically as you're going through it all. And a lot of that is exactly why I wanted to bring you onto the show, because there are so many areas that you've touched and so many pioneering things, and you're I think you've had a really interesting career at sort of skating to the areas where a lot of the action's happening, and a lot of the the deep tech that's come through. You mentioned the FPGA movement that was fantastic back when we were working in that sort of area. But you've been looking at you mentioned 45 different engagements over the last 10 years. That gives you an enormous amount of exposure to an enormous amount of areas of things. So we're going to sort of break those down and look at some of the sort of trending things that you've been involved in and looking at and seeing over the last couple of areas. One of those probably that's dominated the headlines over the last 10 years or so is the whole Web3 world. So give us a little overview of what you've been doing in that sort of space and where you see it right now.
Yeah, it's an interesting one. Web3 is an interesting one because is there really a major difference between Web 2 and Web 3? Yes, there is, but no, there isn't. And what I mean by that is it's the same tech, but they use message buses for real-time responsing, and you've got continuous updates, messages, highlights going through. So the tech isn't that hard to move to. You can use your standard tech and then migrate across. It's not like a big myth or amazing thing to sort of jump into, and it's not big and scary in that sense there. What it really allows to do is break down into nano, micro and functions, so you can break down your monolithic environments very, very easily and then distribute. But then your world becomes like Lego. You can just create a little block, put it in there, enhance what you need to do for your market space and sort of move forward from there. So it allows a lot of small companies to tackle bigger problems very, very quickly. So digital identity, sovereign identity, security in that sense there, because you're just replacing the modules, and it allows bigger companies to keep up with the smaller companies and the agility to deploy tactically where they need to on their legacy tech without having to revamp the whole thing.
Yeah, and I love that sort of democratization that we're seeing across the industry at the moment. You're right that smaller companies can come in there and tackle bigger problems, which completely changes the game. I mean, look, you mentioned some in your bio at the start, some companies there that have been sort of legacy tech orientated, and I love the fact now that with not only Web3 but AI as it sort of comes through and everything around that you're starting to see this much more personalised, opportunistic sort of world in tech that we're living at the moment, and that creates a lot of opportunity around it as well. So yeah, look, it's an interesting space, and and I love the fact you've gone in there and sort of seen what's happening. You mentioned there the digital identity piece, obviously something where we're seeing more and more noise and action around it, something which people are grabbing onto. What's actually happening in that area?
So I wouldn't say it's an arms race, but what people are trying to do is have a digital passport, like a nomad. So where you keep your assets, whether you are multi-passport holder, you're domiciled in a single country but you hold multiple citizenships, where do you want to pay tax, what tax advantages do you want to do on your trading, asset holding, moving, things along those lines. And digital identity allows you to basically use things like HSMs, whether they're physical or whether they're logical ones, and create a personality for you. And that personality is your digital ID, and only you can access it. But it's a fingerprint, and it has a public key that you can send out around the world, and people then can make sure it is you. And then when you get bad actors that try to play in that area, they validate against you, and you can obviously deny them access to relevant information. But it also allows you to share relevant information for relevant areas of business. For instance, if you want to do a trade, you don't want to show the whole of your net worth or anything you got, you just want to show the assets that you want to trade at that given time. So using your identity allows for the acceleration of that process in that sense. But yeah, I think you're going to see an emergence of the Web3 type technology in the nano functions, a micro side to QComs that's coming around, the AI, the agentic, and the guardrails that are coming around there. And I think Web3 offers a lot of the flexibility, especially for guardrails on the security side.
Yeah. And another thing you mentioned before we came on air was this concept, which I hadn't actually heard before, when you talked about dev everything. So obviously, I'm constantly hearing about the DevOps movement, DevSecOps, everything around it. Dev everything is a new expression to me as of today, and I'm enjoying it. So expand on that a bit for me.
So I'm a bit of a traditionalist. I still believe that you need specialists in special areas. People like myself. I do fractional CTO and CISO work, and I come in and I look at an organisation, and you find you've got a lot of key man risk or key personnel risk in certain areas or technology, and that comes down to the dev everything. And that's because Tom or Jenny who are sitting at the desk, they do everything from your ops, your cybersecurity, your network provisioning, your infrastructure, then they're doing your NOC and everything else in that sense there. So it all falls down onto them. And generally the dev everything means that if you're a developer and you understand basic programming languages or you have a history of it, you can move into any one of the sectors you want, but your strong pull is development. And so, there's a difference between a coder and a developer, as we all know, and what sort of lines of people you need at any one given time. But the dev everything opens and exposes a large problem, and that creates a lot of technical debt and security risk in attack surfaces. Now, the reason I say that is because what happens is, I'll go and see some of the companies over the years I've done, and people read the AWS, Azure, textbook. It's all in the cloud. It's all cloud. And what they do is they copy and paste straight from the configuration manual and stick it straight into their containers, and they're like, yeah, we're all done. But later on, that has an impact on risk and security and vulnerability, or even continuous operations. So you'll find that some entities won't have a primary, secondary, tertiary or quaternary environments. They'll just have a primary environment. And this is where we at the CIDC side, where they're constantly innovating on that environment. It's up and down, and you see a lot in the crypto world where they just stop something, bring it back up, and off they go again. They don't really have a major understanding of primary and secondary and dependence and moving and rotation and updating in that sense there. So dev everything is great, especially if you're a startup and you're trying to get something off the ground and you've got vibe coding going on and everything else in that sense. But the reality is it exposes and creates such a risk for you.
And that risk is we see it more and more, as you sort of talk about a more disbanded industry and smaller teams doing that sort of thing, that risk of people wearing multiple hats becomes a genuine key risk at various different stages, doesn't it? Particularly when you look at things like, we're about to release our salary survey, and I'm always fascinated when we look at some of the data about average tenure, and the average tenure of software engineers in the industry is only about 18 months. And when you talk about that sort of loss of knowledge and experience that consistently, plus a time now where one of the bits of data that we came out there is 89% of people are unhappy or contemplating a role in the next 12 months.
Yeah, that
creates a lot of risk around businesses, and I guess you coming in there and being able to sort of discuss the limitations or the opportunities within that.
Yeah, absolutely. And I don't get me wrong, I think dev everything is a great thing. Yeah. I think it allows for agility and growth of products and time to market. So invention to commercialization has gone from 50 years, 25 years, something like that. And it's almost the 18 months, right? You create something you want to get out of the door, and the 80-20 rule is 80% okay, we'll get it out there, we'll get some market feedback, we'll get it working, generate some revenue, get some more investment, move it on, and in that sense there. But what actually is happening now with the speed of dev everything and Vibe and AI, what's actually happening is it's more like 20-80. So it's 20% ready, let's throw it out the door, and you've got all these 80% problems, and people don't think about that. So, when we do engagements, or PA does engagements for investment for companies on the M&A side, and the seeding the money or things like that, we review the code, we look at their tech teams. And what we find is generally people advertise for, say, like a CTO role. I find it as a prime example where they'll hire a senior dev, and a senior dev is a great dev, right? No, can create product till the cows come home, absolutely fantastically. But they're limited in their knowledge and exposure and experience in the wider breadth and depth of IT and operational side of that side of IT. And what happens is they offer them the CTO role because they get a cheaper, higher end resource. And it's almost like the CTO has to create a product, has to do everything else in IT, and then they move on, and then they backfill. And then when they get further money, Series A or Series B funding, generally they call people like me to come in and either help coach or take over for a period of time whilst they look for somebody else that has a broader depth and experience. And that can create bad blood, it can create hostility, but what really happens is there's a vulnerability in the company, and that's an issue. And what happens is people transition because they then, like you say, want to leave the company because they're like, well, I was here since the beginning, you promised me this role and it's not my role now. And so it causes a few problems.
I think that's an important aspect you talk about there, isn't it? Because there is a different team needed at various stages of growth of a business, and I think sometimes people hang on to that romantic notion of everyone moving through all the way through, but people's skill sets evolve as the company evolves, and different skills are needed as that comes through. And occasionally you get those lovely stories where people come through as a group and as a team all the way through. But I think it's important. You're right there in saying that you get the right people who coming in at that sort of stage and being mature about that.
It is, and that's where I find the fractional work works, because like smaller companies, as they're going through that stage, can't generally qualify out the money and the investment into bigger and more experienced teams. So they work with what they've got, and quite rightly so. I started a company called Horrible with my business partner David. We then sold that quite well, software company, and we had the same thing. Go get the investment, you start off small, you create the product, you take it to market, you get adoption, and you move forward in that sense. And so, I understand it and I get it. So, from FTA's point of view, we're quite good at walking in and going, okay, you've got this, you only need us like 1 day a week, 2 days a week, whatever it may be, once a month, and come in and sort of put the hand on the tiller and sort of steer them in the right direction. But generally the first 50 that start the company aren't the last 50 that finish it. They do rotate through, and for good or bad.
And I think that's an important thing as well. And what you said there, it's not about saying, right, how can we get as much work as possible out of this sort of thing. It's like, let's look at it and say, what do you actually need from us? And I think that maturity of how you guys go about it is really important for, to get a win-win, because I think so much in consultancy is billable hours and how long you can be in a place and how much you can milk a project for. But I think when you're talking about it like that and saying that let's come in here and get equity in what we're an equitable agreement with the company, not equity per se, but equitable agreement with the company to say that this is what you actually need and how we can help, and where we can come in and know the right time to leave it at the same sort of stage, isn't it?
That's the thing. What we try to do is KISS, keep it simple, keep it stupid. Move in, look at it, do an evaluation, write down what people need to do, give it in a clear statement of work. Say this is what you need to do. You either do it now, we can do it later. These are the risks of doing one or the other. Here's the cost of doing it. Do the engagement, and I tried to make sure that we touch base with all our clients again. We get called back quite a few times to clients and projects we worked on over the time, which is nice. Sometimes the moment's not right for people, but they'll come back. My sales cycle is around about 9 months. 3 months to find it, 3 months to do it, and then 3 months to get paid for it along the way. So you're constantly putting things in the hopper to try to get it to drop out of the bottom. So I'm doing more sales than I generally thought I'd ever do. So my
he can do it all. He can do it all.
No, I can't. I rely on lots of other people to help me with that.
Well, there's a good track record, as we were talking about at the start of it, of people you've done right by. And I think that's the thing, isn't it? Look, people, you've been known for a long time around the industry. You've got people in there. If you are, then I am. There's a lot of people there who've raved about what you've done, and I think when you've got that network and that credibility of some of the things that you've been able to achieve so far, then it sort of naturally comes on through that process, and sales becomes more referrals and networks and everything else in between it.
Yeah, I'd like to think so, and it's nice for you to say. We try to do our best by people. I treat people as I want to be treated, and if I can help them, I can help them. And if it happens to be that I get money at the end of it, then even better. Then my family's all right.
Then they're all right as well. Fantastic. You touched on it a couple of times now, but vibe coding is another area where you're seeing some sort of growth and conversation at the moment and what people are talking about. Before coming on air, you spoke about the sort of tech debt that's involved in around that sort of space. Tell us what's happening in the conversations you're having around vibe coding right now.
So I suppose in the last 12 months, I've been lucky enough to be invited to a number of conferences and small meetings, and you talk to companies about it and startups and things along those lines. And it's great for standing up a project very, very quickly, demonstrating your basic principles. So rather than just death by PowerPoint, you can actually show a working model of what you're talking about. And what you end up doing is provisioning an environment, whether you choose a main cloud provider or you choose a hybrid or you choose dedicated, whatever it may be, you stand up your environment and you're like, yeah, great. But what you're not doing is creating terra firma in technology ways. So what happens is you've got vulnerability on your compiled code. The code isn't run as efficiently as it should. There's errors in it. There's not, it's not documented correctly. It hasn't been tested 100% correct. It hasn't had functional, non-functional testing against it. So you've got all these different basic things that go on, and everyone goes, look, the product's up, and straight away, as soon as the product's up, they want to commercialize it and sell it. And then that's when you start getting the problems. Do I have the security? Do I have the access? Can it scale? Right? I mean, it works with 10, so is it going to work with 1,000? Probably not. And so what you actually do is you invest this money, time and effort getting somebody or a team to write in vibe code a load of applications for you. You deploy them out there, and you suddenly, you start getting adoption and usage, and then all of a sudden you start getting production errors. Things going down. You've got capacity issues. You've got volume. You've got data writes. You've got memory leaks. You've got whatever it may be. All these things going on, and suddenly your system comes down like that, and you don't really know where to look. And what inevitably happens is you have to scale back your operations a little bit, or you horizontally scale them up to meet the demand, which then increase your costs. So the money you think you're going to make, you then don't, because you're putting it back into it, and then you've got the CFO, the founders and the investors and everyone else going, well, the hell, we just spent a load of money on this and it doesn't work. So you've got this technical debt you have to then go back and address.
And so how what sort of things are people doing to improve that sort of scenario?
So there's lots of education going on, which is great in the place where people are turning around and saying, okay, so for instance, security, I need a security module. Okay, well, this is where the Web3 side comes in with the nanos and the functions and micros in that sense there, where you can go get yourself from a third party a binary, a library, whatever you want, bring that in and address that, and that takes care of security. So you can actually get it to address in that sense there. Your input for how you write the code, there's a lot more documentation and pre-prepared sort of code inputs, you can actually put straight in there to try to secure it, to make it a little bit better. So the world is advancing in that sense there. But the time to market of an application now has gone from months to days, right? And we're seeing
and going down even further, isn't it?
It is, yeah. It's like hours to throw something up there and say, it's done. And of course, what happens is you get a lot of hype and publicity, and everyone jumps on it. And then, a few weeks later, you see like a shocking headline, and X amount of data's been leaked. You're like, that was embarrassing.
That wasn't supposed to happen. Fair dues. You mentioned your sort of background at the start, very traditional sort of finance. Since then, you've obviously gone into this sort of fascinating world where decentralized finance has sort of merged with the TradFi world. Had sort of various trips into that, but also I think you've seen it in the same way that I have, that crypto is a world that, whilst is fascinating and undulating and everything around it, there's also a lot of traditional technology that comes all the way through it that goes across. Now, if we go back 15 years to when we first started speaking, it was all around co-location, etc., which has obviously been a mainstay of the industry for a long time. Again, it sort of parallels across to what's happening in the crypto world at the moment. I know that's something that you've been involved in taking the expertise from there and bringing it into the crypto space. Tell me a little bit about what's happening there.
So the crypto space isn't too dissimilar to any other asset class, and I think when you look at it as just another asset class, it's just something else to do. It's a bearer asset that you want to trade, and it's high risk. There's nothing really there. It's a code, and so if people believe in it, then they'll trade it, and great, happy days. I love it. I think it's fantastic. People can get money and wealth. But the problem is getting your money onto or into crypto and then getting it off. So you've got the fiat rails and the payment rails in that sense there. So you have to be careful of what you're paying, who you're paying, where you're paying it, what your tax liabilities are, or anything along those lines. In technology terms, everything was, we're decentralized, we're everywhere. And you're like, well, you're not really, are you? Because you still have a central matching engine. No, it's distributed in the cloud. But those servers are in a physical location, Frankfurt, New York, wherever they may be. And so people are then saying, well, hang on a second, something happened on the market and I didn't get the update. I didn't see the market data. Did you get my trade message? No, it just disappeared. And, I sent some assets to you. Why is it taking so long to clear? I've sent some funds. And what you normally see is the fiat side of the payments go through very, very quickly, because obviously it goes on traditional payment rails, banking cards, BACS, CHAPS, MTS messaging, or MTX now. And you see all that go straight away. And then you try and do the crypto side, and they're like, well, hang on a minute, I'm waiting for the blockchain. It's just cost me extra to go do this. So then we had different layers, chains come out, to try to speed up that execution response time. And then eventually people went, hang on a minute, institutional players want to get into it, but they're not just going to send it over to, Toby, there you go, there's a load of money. I'll wait for the other side. So we started having DVP and real-time atomic trade and all this sort of stuff, and these great words. What it really means is you've got to mature your IT. And the maturity of IT is through security and operational side. You need consistent, reliable market data for people to be able to trade on, whether you're retail or institution. You need guarantee services and uptime and performance, and you need to understand that when people are going to trade, they want that reliability and they want somebody to call if it goes wrong. And then on the execution side, you want the ability to, as a venue or an exchange, you want to be able to expand and collapse your environment to save on cost and to pay where you need to pay in order to meet the demands in the market. So at the moment we're in a nice bull market area and everyone's quite happy, and Ethereum's up, Bitcoin's up, the altcoins are all doing well and all that sort of stuff, which is fantastic, but it's going to drop, right? It's a natural market, and we'll probably see that start going through and then not sure. So when that really fast market happened, some of the infrastructure just doesn't work. And people are going, I'm waiting for my delay. I had a stop loss order in there, and if I'd had better market data, better response, better execution cycles on there, I'd have been able to get out before that, or I wouldn't have been able to lose on a trigger. And crypto markets are very, very volatile, as everyone knows. So some of it can trip very, very quickly. So you have a stop loss in a number of points below where you want to execute, and then it bounces straight back up, and you're like, I missed out on that. And then, we have algos in the crypto world, which are called bots. And, they're a bit sophisticated, but they're not, the big boy tier one type algos that we're used to in the traditional sense. But they're coming.
And I think that the as you see more and more adoption of it within the traditional markets, more and more, as it generally coming through as an asset class, you mentioned it straight from the off there, that's where it does just become, this necessity to see it as, exactly that, and it coming seems to be the order of the play from everyone who I'm speaking to at the same sort of stage.
It is, and I think, HM Treasury put a report out a number of years ago saying, funds can hold minimum of 2% of crypto in their portfolios, and that was fantastic. And nobody really saw it, but then, we had FTX and a number of big areas.
Yeah.
And as bad as that was probably one of the biggest turning points for the crypto sense, right?
Yeah.
Everyone recognises that, because what that actually meant was you've got to bring maturity to the market.
Yeah, exactly, yeah.
And you've got to have segregation, you've got to have duty and responsibility, you've got to look at it in a grown-up world. So what's that mean? There's hundreds of crypto venues out there, some big exchanges, small ones, intermediate ones, tiny ones, and startup ones. And we're now starting to see the maturity come through. So we're starting to see the bigger exchanges working, with governments and other bigger organisations to secure what they're doing, getting the segregation in there, getting the compliance in there, getting the regulation in there, and it's coming. It's just going to become another asset class.
Yeah.
So I'm going to see a lot of the bigger exchanges. If a national exchange don't buy them, then they will buy a national exchange.
Yeah.
It will become a traditional asset class. It'll go into the TradFi in a few years, and you'll see the emergence of crypto ECNs, like the back in the day of the hotspots and ABS, UBS. I don't know what it was now. One of the other FX venues. So,
yeah. It's I think that whole world is fascinating. I mean, I remember when you were talking, we were talking about Sam Bankman-Fried, just as we were releasing so when was this? This was probably 3-4 years ago, maybe. We were releasing a documentary that we filmed, just talking about the era of convergence, TradFi and DeFi, and we interviewed loads of different people who had lots of different thoughts and opinions on the subject, and we almost had to redo the final part of it. But you're exactly right that chaos basically just accelerated the acceptance into the mainstream of crypto, which was still starting to move in. I think it then had to rebuild trust and build trust in the space, full stop. But I think it's just such a fascinating space to be into, and it feels a lot more viable than it did maybe 10 years ago when we first started talking about crypto in the arena.
Yeah, absolutely. I think a lot of that comes down because it's a bearer asset. There's always that fear that somebody could steal something, take you from you, threaten you, take your family, all that sort of horror stories that you heard over the years. And that's sort of going away because you have the custodians now, you have the CSDs, they're taking the assets, they're holding it, and it's becoming a ledger movement.
Yeah.
And in order to do the ledger movement, you need to mature your technology, you need to mature your security, you need to have performance and oversight and observability. And that is what we're getting now.
Yeah.
Happy days.
Well, it moves into, you mentioned observability there, and I know that you talked off about doing fractional CTO work, but also fractional CISO work. Mm-hmm. Cybersecurity remains one of the most talked about sort of areas in the marketplace for obvious reasons, and it's not getting easier to have more. There's more and more sophistication around every sort of area of hacking and cybercrime and everything else around that sort of thing. So, talk to me about some of the things you're seeing there, particularly in the front office, where it's been conversations having that around there for a long time now, right?
Yeah, absolutely. And I think some of the roles and things I've been doing in the last few years are very interesting. One of the things I will say is, being a CISO is a hard work.
Yeah.
Right? Because if it goes wrong,
there's a lot of responsibility.
There's a lot of responsibility, and people like to hang that on your shoulders very quickly, but they don't give you the budget for it.
Yeah.
And I think, and I'm in odds with a few people over this, in a friendly way.
Yeah.
And I say that you have to make the cybersecurity side a profit center rather than a cost code.
Yeah.
And then people go, I can make money from this. And you can make money from, the data that you gather, whether it's in your SIEM or, what you're seeing on the EDI, MDR in that sense there. You can monetize that data.
Yeah.
And you can use that data to generate the money you need for the investment for the CISO into security operations.
Yeah.
When we look at observability in general, especially in front office or anything along those lines, we have lots of MSPs and vendors out there that you use, and you just go, yeah, it's in Colo, it's all great. And when you're filling out your documentation for the regulators, this DC's got this ISO, it's got SOC, we're all good. They've got the vacuum areas and blah blah blah. You go through, so we're good and secure. And you go, yeah, but what about your line, right? What's actually going through? Oh, don't put anything on there because it's going to interrupt the critical path. And so with the emergence of better technology over the years, nanosecond, picosecond, white rabbit, all this sort of stuff, and the ability to pick up, examine, and then put down the payload as it's going through, you need an oscilloscope, right, to actually see some of the input on this, right? This is not going to affect the market. You're all getting slowed down at the gateways anyway. There's been some fascinating reports on how people are looking at the gateways and exposing those on the exchange side, which is technological advancement. I mean, it's brilliant, it's fantastic. But the reality is you need to now give transparency to what's going in there. And you can do that safely. And certainly, myself and some others have been working with a number of organisations in the hardware side to look at that. And it comes down to time, right? You need time, you need accurate time stamping. You need to be able to understand arrival, ingress and egress. You need to understand every hop it's going through and examine it, what's happened to it. Has it been manipulated? Has it been looked at? Is it a threat? Is this a client attack, or is it a bad actor attack, or is it just a client made a mistake on their config? Over the years, we've seen lots and lots of issues like that. Now hardware's around and has been for, a decade plus. You can now stop that and prevent it. So why not examine all those messages, get it out there, give the compliance officers and the board and the investors and everyone else and the regulators the view they want to see with the side of going back to Web3 and cryptography and things along those lines. You can expose those data points for the relevant people that want to look at that data at any given time. It's just a matter of actually doing it. But lots of people are scared of doing that.
Yeah. And I think it's so important you mentioned that as well, of viewing it as a profit center as opposed to a cost. And I think that's something, I've spoken about this a lot on the show over the years. And I go back to when I first started in the industry 25 years ago. IT was purely a cost center, generally, as the whole area, the whole area. So IT was a cost center. You very rarely heard CTO. You heard IT directors and IT managers, but they were very rarely had a seat at the table. And we've been seeing more and more C's sort of come through from the tech world, from CPO through to, CTO through to CISO through to more and more of them sort of coming through with that sort of focus it and having a seat at the table. And I think that CISO piece, you're absolutely right, that it can't just be there as someone to blame if everything goes wrong, which I think in many respects it probably can be. To actually, how can we utilise that into the best of the ability? So I love the fact that you're talking about all of that. And I loved everything we've spoken about because it's just such a fascinating conversation always with you. And I know that you're doing lots of so many different areas and so many different parts of it, and definitely at the forefront of thinking in the space. So I've had the wave from behind the camera, so I know we've got to start to wind things up now. But if you're sat there at the moment and you're looking at the industry, and this is a sort of big question to go through. You've mentioned various different areas there of various different areas of tech, so to speak. If you're excited about one thing and pointing people at one thing that they should be looking at the moment, which within this sort of this space that you work in, if you're saying that this is one thing that you're particularly excited about, you think people should be thinking about right now, what would it be?
That's quite a hard question because there's a number of topics that we could actually talk about. I can't wait for the emergence of amalgamation of AI with QComms and Web3 tech. Yeah. I think that's going to change things. At the moment, AI is this, a hammer and everything's a nail, and everyone wants to hit it with AI hammer. And the reality is there's lots of things it can do, and it can do very, very well, but it can't get rid of the human. Yeah. It can't get rid of the expertise, and certainly what we're seeing is, the junior roles, they need to be brought up. So you need more of a AI mentorship. You need to leverage it in the right ways tactically. And if you can bring that and the QComms with the Q date coming up and everything else coming across, then I think that Web3 and AI, that's going to be it. That's going to be the area. That's where we're going to see in the next 5-10 years. Yeah,
I just think there's so much opportunity in it.
Yeah, massive.
In where we're going at the moment. So I've got no doubt that you'll be skating to where the puck's going and
you never know. I'll fall over and do a Happy Gilmore, but hey, who knows, right?
Speaking of what you've been doing, look, there's so many areas which you can add value to in the space. Tell me, who should be reaching out to you? What sort of companies are you helping out, and what sort of things can you do for them?
Again, that's an interesting one. I help startups, from 5 people to 20 people to 200, 300, 700. Yeah. So whether you're retail, institutional, one of my clients is in property and they use AR and VR. And so, I managed the...
Didn't even touch on that, did we?
Yeah, right. So there's many little areas. If it's IT and, you've got a problem at the board level, investment side, you need confidence, you need somebody to come in and put a hand on the till, that's basically what we do. We come in, look at the project, whether it's a regulatory addressing of documentation, whether you need GRCs, there's another great one, right? We didn't even touch on GRCs and deployment of, and the cybersecurity side as well as the assertion side of that.
Yeah.
So that's another emergence. So if you need anything like that, then come and have a chat, and we can
see what you can do.
help you out, yeah.
Matt, it's always a pleasure.
Likewise.
Thanks
Thank
so
you.
much for coming on the show and sharing it with you,
appreciate it.
and thank you all for watching. We will see you soon on the next episode of FinTech Focus TV. Thanks a lot.